Hi everybody, welcome to another update on the stock screener. Today we're going to talk about Prospera Energy because it had a huge move, 30% in one day. So what is happening here? Apparently Shubham has made a private placement of about 1 million, a bit more, into the company. And that is a huge endorsement for this company. He brings a lot of technical expertise. That 1 million can also increase the working capital, pay off debt. So that is very important and it will help the company further. So there was a video out from Mining Stock Education. I advise you to watch it. But there is one section that I like very much and it caught my eye. So listen with me.
Because it's horizontal and we have numerous vertical wells and we have 3D seismic, we can position nice horizontal wells rather than 2 or 3 meters of exposure in a vertical well. We're going to have 300, 400, 500, 600 meters of exposure to the reservoir, and which translates into multiple productivity index. Further, because we can reach out to the reservoir, we can utilize existing surface lease and eliminate numerous surface lease along the pathway. And that reduces huge fixed operating cost. And that will allow us, even though we said $25, it can allow us to get to that below $15, $10 a barrel. But
Did you hear that? He said that operating costs could go down from 25 per barrel to 15 to $10 per barrel in the long run. So I used that number now. I haven't updated it yet. So 25 in the coming 1 or 2 years, going to 15 to 10, let's say 13. So this is probably going to be in 3 years. But it tells us what the blue sky potential is. So let's say in 2026, could be faster, of course, we get to $13 per barrel. And that's what the CEO said. And I assumed 10,000 barrels per day with the working interest 78% gives me this production. And that gives me this this line here. That's the 2026 line. And it's using this production. Yeah, capex will probably be higher. But the thing is, we use the 13 dollars per barrel operating costs. So the blue sky here is that if oil is at 90, which it probably will hit, then we have an upside from the current 70 million market cap at the current 13 cents. It can go from 70 million to 800 million, right? So that's 10x, more than a 10x. And at 100 oil, it can go to 1 billion. So that's a 15x, right? Now, they will also start to convert the heavy oil into light oil with Aduro. That will add another $20. So then we go from 100 to 120 because light oil is more expensive, so more revenues. Then at 120, we could go to 1.2 billion. So that's a 20x. So that's also what Shubham said. This is a 20 bagger and it's verified by me that this is possible with these cost numbers with the 10,000 barrels per day. production. So that's the blue sky here. A 20 bagger in a few years. So you need to wait a few years. It's not going to happen in 1 year. And this 20 bagger, they need to start drilling wells. It will be a slow rise, but it will be exponential. So in the beginning, it's slow, and then eventually, this is the first year, second year, third year, fifth year. It is going to rise much faster in year 2 to 3, because then they get more capital, more earnings, and can drill more wells to go to the 10,000 production. So that was the update. I didn't know yet that the cost could go even lower than my 19. Apparently, it can go to $10 with revenue at 100 to 120 because of the Aduro tech and because of the oil price that's going up. I mean, $120 revenue per barrel and costs of $10. That's a huge margin. That's 90% margins. That's amazing. 90% operating margins and exponential growth. So these are the companies that we need to invest in because they are protected on downside due to the high margins, and they give us upside due to the exponential growth. So these are the perfect companies to invest in, and this company is profitable, so there's no risk of default. It's backed by good people, skilled people. So, yep, we keep on investing in this company, and I'll see you in the next video. Bye.